Welcome back to Chat ETF, where we delve into the dynamic world of ETFs and explore investment strategies that align with your financial goals. In today's video, we'll be navigating the ever-evolving landscape of futures-based crypto ETFs, a compelling avenue for investors seeking exposure to the cryptocurrency market. The realm of cryptocurrency has captivated the attention of investors worldwide, its rapid growth and potential for high returns driving a surge in demand for exposure to this nascent asset class. While the approval of a spot Bitcoin exchange-traded fund, ETF, remains elusive, futures-based ETFs have emerged as compelling alternatives, offering investors a regulated and accessible avenue to gain exposure to the crypto market. In this comprehensive guide, we delve into the world of futures-based crypto ETFs, examining their advantages, exploring prominent options, and highlighting crucial considerations for investors seeking to navigate this dynamic landscape. The quest for a spot Bitcoin ETF, unveiling the elusive goal. Investors have long anticipated the launch of a spot Bitcoin ETF, a product that would enable direct ownership and trading of Bitcoin on regulated exchanges. This would eliminate the complexities associated with futures contracts, providing a simpler and more transparent way to gain exposure to the underlying cryptocurrency. However, regulatory hurdles and concerns about market manipulation have impeded the approval of a spot Bitcoin ETF, leaving investors seeking alternative avenues for accessing the crypto market. Enter futures-based ETFs, a viable substitute. In the absence of a spot Bitcoin ETF, futures-based ETFs have emerged as popular substitutes, offering a regulated and accessible way to gain exposure to Bitcoin and Ethereum. These ETFs track the performance of Bitcoin and Ethereum futures contracts, which are agreements to buy or sell the underlying cryptocurrency at a predetermined price on a future date. While not identical to owning the actual cryptocurrency, futures-based ETFs present several compelling advantages. Regulated environment. Futures markets are regulated by reputable exchanges, providing investors with a layer of security and transparency. Liquidity. Futures markets are highly liquid, enabling investors to trade ETFs seamlessly without significant price fluctuations. Cost-effectiveness. Futures-based ETFs typically exhibit lower expense ratios compared to spot ETFs, as they do not entail the same level of operational overhead. Prominent futures-based Bitcoin ETFs, leading the way. The market offers a diverse range of futures-based Bitcoin ETFs, catering to varying investor preferences. ProShares Bitcoin Strategy ETF, BITO, pioneering the landscape of futures-based Bitcoin ETFs. BITO launched in October 2021, tracking the performance of Bitcoin futures contracts traded on the Chicago Mercantile Exchange, CME. Valkyrie Bitcoin Strategy ETF, BTF, launched in November 2021. BTF stands as a prominent alternative to BITO, mirroring the performance of Bitcoin futures contracts traded on the CME while offering a lower expense ratio. Grayscale Bitcoin Trust, GBTC. While not a traditional ETF, GBTC has garnered significant investor interest, offering exposure to Bitcoin's price movements through shares issued by Grayscale Investments. Expanding horizons with futures-based Ethereum ETFs. The Ethereum market has also witnessed the emergence of futures-based ETFs, allowing investors to gain exposure to the second-largest cryptocurrency by market capitalization. These ETFs track the performance of Ethereum futures contracts, offering investors similar advantages to futures-based Bitcoin ETFs. Regulated environment. Ethereum futures contracts are traded on regulated exchanges, ensuring investor protection and transparency. Liquidity. Ethereum futures markets exhibit comparable liquidity, facilitating seamless ETF trading. Cost-effectiveness. Futures-based Ethereum ETFs typically feature lower expense ratios compared to spot ETFs. Prominent futures-based Ethereum ETFs, diversifying opportunities. Two prominent futures-based Ethereum ETFs have captured investor attention. Grayscale Ethereum Trust, ETHE, managed by Grayscale Investments. ETHE offers a secure and accessible way to gain exposure to Ethereum's price movements without requiring direct ownership of the cryptocurrency. ProShares Ethereum Strategy ETF, ETHO, similar to BITO, ETHO tracks the performance of Ethereum futures contracts, providing investors with a regulated and cost-effective avenue to participate in the Ethereum market. Navigating risks and regulations, essential considerations for investors. While futures-based crypto ETFs offer a gateway to the cryptocurrency market, investors should proceed with caution and thoroughly consider the following factors. Volatility. Cryptocurrencies are inherently volatile assets, and ETFs tracking futures contracts may amplify price fluctuations. Investors should carefully assess their risk tolerance before venturing into this asset class. Regulatory landscape. The regulatory environment surrounding cryptocurrencies is constantly evolving, and changes in regulations can significantly impact the crypto market and ETFs. Investors should stay informed about regulatory developments and their potential impact on their investments. Expense ratios. Evaluate the expense ratios associated with each ETF, as fees can vary significantly. Understanding the cost of investing in these funds is crucial for making informed investment decisions. Expense ratios represent the percentage of your investment that the ETF provider takes as a fee for managing and operating the fund. Lower expense ratios generally translate to higher returns for investors, as more of their capital is allocated towards the underlying asset. When comparing different futures-based crypto ETFs, carefully evaluate their expense ratios to ensure you are not paying excessive fees. Diversification. Diversify your investment portfolio by allocating a portion of your investments to futures-based crypto ETFs alongside other asset classes, such as stocks, bonds, and real estate. This diversification strategy can help mitigate the inherent risks associated with cryptocurrency investments. Long-term perspective. Adopt a long-term investment horizon when considering futures-based crypto ETFs. The cryptocurrency market is still in its early stages of development, and price fluctuations are common. Investors seeking short-term gains may not be well suited for this asset class. Thorough research and due diligence. Before investing in any futures-based crypto ETF, conduct thorough research on the ETF structure, track record, and the risks associated with the underlying cryptocurrency. Understand the ETF's investment strategy, fees, and potential conflicts of interest. Seek professional guidance. If you have limited investment experience or are unsure about the suitability of futures-based crypto ETFs for your investment goals, consider consulting with a financial advisor. They can provide personalized guidance based on your risk tolerance, financial situation, and investment objectives. Conclusion. Navigating the path with caution and knowledge. Futures-based crypto ETFs offer a regulated and accessible way for investors to gain exposure to the dynamic crypto market. While they present compelling advantages, it's essential for investors to carefully consider the inherent risks, regulatory environment, and cost factors before making investment decisions. By conducting thorough research, diversifying their portfolios, adopting a long-term perspective, and seeking professional guidance when needed, investors can navigate the intricate world of futures-based crypto ETFs with greater confidence and success. Thank you for joining us on this insightful journey into the world of futures-based crypto ETFs. We hope you gained valuable insights into this burgeoning asset class and its potential to drive investment success. Remember, while futures-based crypto ETFs offer attractive features, it's crucial to conduct thorough research, carefully consider your risk tolerance, and seek professional guidance before making investment decisions. Together, let's navigate the ever-changing investment landscape with confidence and expertise.